All right. So the crypto fear and greed index, folks, take a look at it. It's off the charts. Extreme fear. By the way, the stock market, same sort of thing. But is this now a buy signal? I want to bring in Market Gauge Managing Director Michelle Snyder, and she's in studio. All right. I got to start with Luna. A few shows ago, I remember you said you like it. You always come up with these esoteric names I never heard of before. I looked at the chart. It made a huge move up. Were you able to take profits on it?
Yes, actually, we got out at about an 80% profit back in April, and then we hit our trailing stop, which was profitable, and we've been out of the coin since April. So,
when you see this kind of a move, because you do come up with these unique crypto names that no one else finds, are you okay still with playing around with this space?
Well, right now, because of what's happened and because we have seen the manipulation, as your last guest just so eloquently stated, we're really going to keep a focus on Bitcoin and Ethereum in particular. They're the granddaddies, and also they're in bearish phases. And I think of the two, I would probably watch Ethereum because it's most closely tied to blockchain technology. That's not going away. So if Ethereum can stabilize here and go back over 2,500, let's say, then yeah, I think we
that
can
would be a
take
buy
it
signal, perhaps?
Yeah. Yes.
All right. I also saw commodities. You still favoring commodities over equities?
Absolutely, and even more so now after the numbers came out this morning and we're seeing the reaction by the treasuries. The yields are actually dropping in the face of higher inflation. What that tells me is that whatever credibility the Fed had coming in, which was nominal at best, has now even decreased further, which means that we could be going into somewhat of a chaotic situation, which we're already seeing in equities, which of course is going to be favorable to gold. The other commodities are already moving. These grains are just unstoppable, especially wheat right now.
Yeah, and so weird too, because I look at what the EU is doing and what we've done, and it just, these governments are making things worse, not better. And it's just amazing. You just sometimes want to just say, hey, go over there and stand next to the Fed if you're not going to do anything to help. When it does come to the stock market, though, what are you looking at?
Well, right now, I think we really want to see things just really clear out. Coming into this year, we saw PE ratios really high. We saw the debt at a crazy high against GDP or percentage of GDP. And so right now this deleveraging that we're seeing is very typical. What I would like to see is either from a technical standpoint some real V-bottom type of situation in a very short term that holds, or I would like to see it get to a point where we kind of start consolidating near a bottom. But even then, I think we could be a while before we see real returns on the money.
But you are buying some stocks, though, right? Mostly defensive?
Really?
Stocks.
Wow. No.
What about bonds? I mean, you talked about the bond yields. This week, the last 3 sessions, they've been really intriguing. In fact, there's been, the inflationary names in general have been kind of odd going back to these last 3 sessions. Is that something of a signal for you?
Well, we bought bonds, actually the TLT long bonds, on Monday when we started to see the market unravel, because we saw that that was actually moving up while the market was having its great liquidation. And that to me was a sign that perhaps what's happening now is that bonds, in terms of the inflation and the hawkish Fed, were turning into more of a flight to safety. And that really told me that it was time with a very low risk to get in. And so far, if you look at the board today, it's one of the few things that are actually up.
It's acting pretty good.
It's acting pretty good.
Michelle, you cover it all. Appreciate it. Glad to have you in the studio.
Thank you so much.
All righty. All right, folks.